Welcome back to the Stocks Update. If you're tracking Lucid Motors or invested in the EV market, today's market action might have left you with more questions than answers. Buckle up, because we've got a ton to unpack, from Lucid's steep drop in stock price, new analyst ratings, unexpected institutional moves, to a surprise partnership announcement. Let's dive in. Lucid Motors stock is experiencing a sharp decline today, down by a significant 5.93%, currently trading at $2.35, with a day's high only reaching $2.53. This kind of volatility isn't just noise, it's reflective of broader market uncertainty, driven by both geopolitical and macroeconomic headwinds. The tension in the market really began to heat up after former U.S. President Donald Trump made a rather stark statement this past Sunday. According to Trump, the United States and China are not seeing any substantial progress in their ongoing negotiations, and there's no deal on the horizon. This comment triggered immediate anxiety across global markets, especially in sectors that are highly sensitive to international trade and policy shifts like electric vehicles. Interestingly, while Trump's comments dampened market sentiment, some positive economic indicators were also released today. On the surface, that sounds like good news, right? But here's the twist: we're in a strange economic phase where too much positive data can actually be bad for growth stocks. Why? Because it lowers the chances of interest rate cuts in the near future. We saw this same kind of paradox back in 2024, where strong economic data made investors nervous about the Federal Reserve easing its monetary policy. Today, the chance of a 0.25% interest rate cut in the June 18th Fed meeting has plummeted to just 27.7%, compared to 61% just a week ago. The EV industry, as many of you know, is especially vulnerable to interest rate changes. These companies typically rely heavily on borrowing to fund their rapid expansion, and higher rates can really choke that growth. Today, we saw Tesla drop by about 2%. NIO slipped 0.87%, and Rivian slid 1.84%, but Lucid leads the pack in losses. It's currently the worst performer among major EV names. Now, what's really fascinating, and perhaps alarming, is that the timing of this drop aligns closely with some very large sell-offs from major institutions. We're talking about multi-million share dumps: 3.41 million, 2.25 million, and 1.02 million shares, all in just the last 20 minutes of the trading session. That's not your average day trader activity. This looks like big players trimming or even exiting their positions before something major, and all signs point to Lucid's upcoming earnings report. To add another layer to this already complex situation, Cantor Fitzgerald's Andre Shepard issued a new analyst rating today, maintaining a $3 price target on Lucid. Now, you'd think that a price target above the current stock value would be a bullish sign. But instead, investors seem to react negatively. Why? Well, according to Shepard, whose past analyst calls have a success rate of around 43%, Lucid's negative growth margins are a major red flag. That kind of margin pressure means the company is struggling to scale profitably, and it casts doubt on their long-term viability. Another point of curiosity is why this rating was released right before the earnings report. Many investors and analysts alike question the logic behind issuing forecasts without the latest financials in hand. It creates more uncertainty than clarity. In a surprising move, 6.1 million Lucid shares that were previously sold short have now been covered, that is, returned to the market. This is a bit puzzling. Are the shorts clearing space to re-enter tomorrow after earnings? Or are they actually expecting the stock to rebound and are cutting their losses? Let's put this in perspective. 28.32% of Lucid's free float is still being shorted. That's approximately 3.48 million shares, a very high percentage, indicating persistent bearish sentiment. If you caught my weekend video, you'll remember I discussed Lucid's implied volatility ahead of this earnings call. The implied move is 10.54%, which translates to a price swing of about 25 cents to 30 cents in either direction. Based on historical trends, there's an 80–85% chance that the market misreads Lucid's earnings report. What does that mean? Lucid usually gets a pass on revenue and profits. People don't expect them to be wildly profitable yet, but they are heavily scrutinized on forward-looking guidance. And it's that guidance that could determine whether the stock surges or crashes tomorrow. Now, let's talk about something a bit more hopeful: this morning's announcement of a new strategic partnership between Lucid Motors and KAUST King Abdullah University of Science and Technology. This collaboration aims to enhance Lucid's ADAS advanced driver assistance systems and autonomous driving capabilities. While the news sounds impressive, some investors are skeptical. A review of KAUST's website reveals little evidence of direct experience in EV or autonomous technology. Though the press release does highlight their storage technologies, it raises a valid question: is Lucid focusing enough on that in ADAS? Historically, Lucid has struggled to show progress in energy storage tech. This partnership might change that, or it could be another overhyped announcement with little real-world impact. But there's reason for optimism here. This could signal a renewed commitment by Lucid to expand its R&D efforts globally. Let's not forget, the company had previously claimed it lacked the infrastructure to fully execute in Saudi Arabia. But now, with billions of dollars in new investments, things are shifting. There was even talk of a prototype #2 toward the end of 2022. The company has the technology, no one doubts that, but the execution has always been the sticking point. Maybe, just maybe, this is the turning point. Turning to the options market, we're seeing some interesting plays. Today's activity includes around $1.68 million in call options and $324,000 in puts, indicating that roughly 53% of the market remains neutral. There's a particularly notable cluster of $2.50 call options worth $908,000, expiring on May 16 and June 20, 2025. These were not placed at the bid or ask, they landed in between, which analysts often interpret as a neutral signal. The market, in short, is waiting for a catalyst. The bulls believe Lucid stock could climb to $3 or even higher, potentially hitting $4.50 this week if earnings guidance is strong. The bears, or short sellers, are eyeing a drop below $2. In the institutional trading space, those plus $100,000 trades, there's a mixed bag of buying and selling. But data from dark pools shows a consistent trend. Most of it is selling. Those large figures we mentioned earlier, 3.42 million, 2.25 million, and 1.02 million, all support this conclusion. Currently, Lucid is trading at $2.39, which is slightly below a key pivot point of $2.41. That level will be critical to watch in tomorrow's session, and especially post-earnings. Meanwhile, $2.18 stands out as a strong support level. If that breaks, we could be in for some serious downside. On a technical note, the 50-day moving average is still holding up as support, which is a positive sign. However, the 100-day moving average sits around $2.64, placing Lucid in a wedge formation between short-term and longer-term momentum trends. This tightening wedge often precedes a big breakout or breakdown. So, where do you stand in all this? With Lucid facing a pivotal earnings report, institutional traders making aggressive moves, and partnerships being announced, are you buying the dip, holding, or selling your shares? Let us know your thoughts in the comments. We love hearing from you. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.